We got new tax laws going into play. Here's the major ones affecting most, and a few that we don't see any changes. At the end, I'm going to give you a link where you can see a full summary related to this. So, JJ, the CPA here, hope you're doing well. Here's the big one, at least for small business owners, is that the QBI deduction remains at 20% and in effect after this year. You may not be aware of this, but this is a beautiful, out of thin air tax deduction, meaning the net income of your business times 20% is a deduction out of thin air, and it continues. With that being said, of course, there's always exceptions to that and phase outs. Also, no tax on tips, but where this is landing is that it'll be up to $25,000 of tips, and they did define which industries will be able to benefit from this, and of course, there are phase out. No tax on overtime up to $12,500. The same. Any tax law is going to have exceptions and phase outs. Additional senior deduction. You know, I'm about getting there myself, but an additional $6,000 deduction for seniors. Car loan interest. What? Now, this is going to be a deduction. It'll be up to $10,000, and it'll be on American vehicles. The SALT. What is SALT? State and local taxes. What's that? Real estate taxes, state taxes, income taxes at the state level. It's been limited to $10,000. They've landed at $40,000. Now, for states that have the pass-through entity tax play, if you will, well, the House said nope, but the Senate said yes, and what's going into play is yes, it will be allowed, that workaround. 100% bonus depreciation. Check this one out now. It's back to January 19th of 25. 100% bonus depreciation means that for the qualifying assets in your business, bam, 100% deductible if it makes sense for you. Also in depreciation world, Section 179, that depreciation is allowed 100%. Now, it does get limited to your income. There's some exceptions to all that. You know that, right? But anyways, up to $2,500,000. The Green Clean Vehicle Tax Credit. Don't know that you're going to see this as a positive, but it expires on 10/1 of 25, meaning from 10/1/25 and after. If you purchase it, from that date and after, you're not going to be able to get that credit. That's that $7,500 credit. No changes, little changes, tax rate, standard deduction, other dependent credit, the earned income tax credit, the estate and gift exemption, the mortgage interest is going to be limited still to the $750,000. And when we're talking about the child credit, slight increase for that as well. So as promised, in the body of this video, you'll find a link to a summary going through this. Check out other videos related to this as well as my seminars. And here we are basically now able to plan, get with your tax professional, stay tuned on how you can take advantage of these things. And a big part of all this is that we're going to get this continued relief that we've all gotten used to in the law that came into play in 2018 as we move forward. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.